Hello, everyone. Happy weekend. Although I don't know if it's happy for the crypto markets. Things are looking pretty bleak right now in those crypto markets, and I wanted to make a video just addressing, my thoughts and how I feel about the overall sentiment of the market. So let's get into it. Not a lot of good news today, but it's still good to be informed so we can make informed investment decisions. I'm not a financial advisor. I'm just some guy in interwebs just giving his opinion on how I see it. So let's get into it. So the headline: Bitcoin loses the 20K support. Last time Bitcoin's under $20,000 was in 2020. So this is big. It's not a good milestone at all. We look at the overall crypto markets, it's a sea of red. Surprisingly, Tron is on there, TRX, it's a green, and we're going to get into that one a little later. But as you see, the price of Bitcoin is 19,141 at the time of this video, and ETH has fallen under $1,000. So things are looking pretty bleak. Wow. Then we look at the fear and greed index. You see that we're at the 6. That's the lowest. Extreme fear. Yesterday we were at a 9. Today we're at a 6. So things have gone from bad to worse. So I think we're in a risk-off environment as far as investing goes. That's in crypto as well as equity stocks market. So I wanted to dig into that. We hear risk off a lot. A lot of these finance channels talk about it. And what is risk off? So according to Investopedia, investors' appetites for risk rise and fall over time. At times, investors are more likely to invest in higher risk instruments than during other periods, such as during the 2009 economic recovery period. The 2008 financial crisis was considered a risk-off year, when investors attempted to reduce their risk by selling existing risky positions and moving money to either cash positions or no risk positions such as U.S. Treasury bonds. Not all asset classes carry the same risk. Investors tend to change asset classes depending on the perceived risk in the markets. For instance, stocks are generally considered to be riskier than assets than bonds. Therefore, a market where stocks are outperforming bonds is said to be risk-on environment. When stocks are selling off and investors run for shelter to bonds or gold, the environment is said to be risk-off. So down at the bottom, while asset prices ultimately detailed risk sentiment, changing sentiment, and given our current situation with macroeconomic data and global central bank tightening and all these things kind of impact investors and make them run for safer assets to invest in. All right, so other bad news for the crypto market this week. It's just been just a slew of bad stuff coming in. This week, 3 billion crypto lender Celsius halted withdrawals, locking users out of their funds and raising fears that it may face insolvency. Celsius acts a lot like a bank, taking investors' crypto and lending it out to institutions to generate return on deposits. It holds lots of assets and in so-called decentralized finance space. Celsius, which says it's acting in the interests of our community, did not return multiple requests for comments. Another key player, Three Arrows Capital, is in the midst of its own liquidity crisis. The 10 billion crypto hedge fund is reportedly on the brink of insolvency. So Three Arrows Capital was also an investor in Terra. And if you guys remember in the market, about several weeks ago, Terra also fell, and that impacted the crypto market as well. And basically its algorithmic stablecoin lost its peg to the USD, US dollar, and things went south real quick. And I see that these two companies, Celsius and Three Arrows Capital, will be following in their footsteps, all of which are not good for the crypto market. So looking at Celsius Twitter page here, you see that looks like June 12th is when they announced saying that it's pausing all of its withdrawals, swaps, and transfers, and acting in the interest of their community is their top priority. To date, there's been this has not been resolved. Everything is still halted. So this is impacting crypto. So this guy, Miles Dutcher, on Twitter broke down everything perfectly, way better than I could. So I figured I'd go through that with you guys, and it helped me a lot just understanding what happened here. So here we go. So Three Arrows Capital is a crypto venture capital fund. At their peak, they were managing an estimated 18 billion in assets, ranking them in the top 3 VCs in the space. Some of their most successful investments are Avalanche, Near Protocol, and ETH. Unfortunately, a mix of poor risk management, greed, recklessness has led to insolvency, which has severe ramifications for the entire crypto space. Here's a step-by-step summary of how it went down and what it means for crypto. It all started when Shuzu deleted his Instagram account and went radio silent on Twitter, causing rumors to spread about a potential 3AC margin call. Shortly after, it was revealed that Three Arrows Capital had 245 million in ETH deposited in Aave, of which they used as collateral to borrow 189 million. Due to their illiquidity, many of the tokens were locked. They were unable to add collateral or pay off the debt. This led to a liquidation cascade. Many began to label their overuse of leverage as irresponsible, as many positions were left exposed when the market started dropping. The things got worse. It was revealed that 3AC was leveraged long everywhere, resulting in a flurry of margin calls. Instead of answering these calls, they ghosted everyone, resulting in forced liquidations, leading to a broader market dump. It became evident that liquidity issues were worsening, and Three Arrows Capital were seemingly forced to sell over 60K and stake ETH. As the stake ETH saga unfolded, Shuzu finally confirmed the market suspicions by publishing his first tweet since the fiasco commenced. He says, "We are in the process of communicating with relevant parties and fully committed to working this out." The beginning of Three Arrows Capital's woes can be directly tied back to the collapse of Luna, UST. Three Arrows Capital supposedly borrowed money off of investors and deposited into Anchor without informing the investors. They then bought 560 million worth of locked Luna. That position then collapsed to a mere $600. Three Arrows Capital allegedly used counterparty funds to build a 9-figure UST position in Anchor Protocol, unbeknownst to its creditors prior to the collapse. Then there's speculation that these losses led to Three Arrows Capital to increase their appetite for leverage as a form of chasing losses. Like many investors, VCs and asset managers like Three Arrows Capital and Celsius got overconfident in the heat of the bull market. We see this in a lot of poker regarding as being pot struck, when effort or money already spent is causing you to stay around even though it's a losing proposition. They kept putting money into the pot to recoup previous losses, resulting in exponentially increasing risk. As Vinny Lingham pointed out today, in crypto, you're already taking a significant risk as it is. Why add leverage and further compound to said risk? So why does the 3AC insolvency spell disaster for crypto? Because they borrow from almost every major lender. They borrow from FTX, Celsius, BlockFi, Nexo, BitMEX, to name a few. If Three Arrows Capital is unable to repay these loans, all lenders inevitably will take a hit. This kicks off somewhat of a domino effect. Unfortunately, the sheer size of Three Arrows Capital loans spell more trouble for your typical borrower. If you take out a $100,000 loan from a lender, then you're the one that's effed. However, if you take over 100 million loan from a lender, the lender is now effed. When lenders start to get affected, this is a detrimental as it leads to an increased collateral liquidations, which has a negative price impact on related assets. So there you have it. So basically it came to greed, and it looks like Three Arrows Capital invested a lot into Terra and the Anchor Protocol, which at the time was given about 18%, 19% APY. And they figured it was a wise investment. They didn't tell the investors about it. And then we all know what happened to Terra. And then that's a domino effect. Now, we talked about Tron earlier when the heat map showed that it was kind of up a little. But I have some concerns about Tron too. Earlier this week, they lost their peg. They have a USDD, their version of a stablecoin. It's basically a replica of the UST Terra stablecoin. And we see how that went. So it's an algorithmic coin, and it lost its peg. It was at 96%. Then they had to deploy some money, and I think this week they deployed over 500 million to get the peg back up to the dollar. So I would watch this closely, as Terra could be the next company to fall as well. I'm sorry, not Terra, Tron. So we have Celsius, we have Three Arrows Capital, and Tron is on the lookout. And we already had Terra. So you have all these things happening, and everyone is scared right now. So, given the backdrop of the Ukraine-Russia war. In the U.S., we have these inflation going crazy. Inflation, believe it or not, is all over the world. It's going crazy in a lot of countries. Media doesn't cover it much, but it's an issue. So Bitcoin, we saw that it's under the 20,000 number, which hasn't been at that level since 2020. We saw that it broke support here at the 20,000. So how far down could it go? No one knows. No one really knows. But at these levels, I'll still be investing, DCAing into this. I think under 20,000 for Bitcoin is amazing. I mean, do you guys remember last summer or, last year, how pissed you were when you saw Bitcoin at 68 and wondering, wow, man, I should have got into it when, people were telling you about it years ago. Well, here's your chance. A lot of these crypto coins that you hear about are at a super discount right now. I mean, ETH's under $1,000, which is awesome. So, do your own research and figure out which one you want to get into. So in conclusion, what I'm doing is holding the line. I'm not selling any Bitcoin, not selling any ETH. As a matter of fact, I'm getting back into them. So I'm just continuing to DCA into these, and I love these levels. And if it goes down lower, I'll be investing more. So overall, bad timing. These issues, these liquidity issues are not helping the situation. And also the backdrop of inflation, recession, and war, not helping it either. We're basically at a risk-off type of environment, and crypto is definitely seen as a risk type of investment market. Liquidity in the crypto market appears to be more intertwined than originally thought. So a lot of these VCs, a lot of these companies are, they purchase from each other, and if one falls, then it impacts the other, and so on. I expect more shoes to drop, including insolvency announcements and pending U.S. regulation. That's another thing. They're looking to regulate the the crypto market, and stable coins has a big bullseye on it, especially with all these issues that just came up, starting with Terra, and this ain't helping. So be on the lookout for that. And right now I'm holding the line. I'll be DCAing at these levels. Under 20K is a great level for Bitcoin, if you ask me. And for ETH, as soon as it hits 700, if it ever does, I'm going to be DCAing into ETH as well. So right now, the way the market's looking, I'm not really into altcoins at the moment. So I'm focused on Bitcoin and ETH. So that's how I see it. So guys, thank you for watching. I wanted to make this kind of quick, but it ended up taking longer than I wanted. And, like I said, do your own research. If you want to get into crypto is definitely risky. But, if you invest to it now when everyone's kind of running away from it, this is when most of the money is made. So come the next bull run, people will be like, wow, I should have got into it. And you'll be the one that said, hey, I stayed, I did my research, I knew what I was getting into, and it paid off. So guys, have a good weekend and stay safe out there. And please, thank you for liking this. And also, please hit the subscribe button so I can continue to make content for you guys. And hope you have a great week. And again, stay safe. Later.